Hey guys, Boris Schlossberg from BKT. Good to be with you. Another great week of trading for us at BKT. Many of you may know that Kathy and I are moving over to GFT Forex. We're going to start August 18th over there, but in the meantime, we are trading and following the markets for BKT without any interruption. So I want to take a look at this week's trades because we had a very interesting trade in the Kiwi Yen that very much validated and confirmed, I think, our model of trading. And the most interesting thing about the Kiwi Dollar trade, I think, is this notion in the investment business that there's never one cockroach. And that's basically an old line saying that says that whenever there's a problem in a particular instrument, usually there's going to be more problems down the road, and you can take advantage of it by trading trend. Example in the Kiwi Dollar is precisely this. The week prior, we had a cut in the RBNZ interest rate, suggesting that the Kiwi economy is really becoming much weaker by the day. So once we had an opportunity to sort of find any kind of a retrace in this trend, we decided that we were going to take a short, given that we had good event risk ahead of us. Now, we got short ahead of the trade balance, and it turned out to be actually the trade balance itself was not nearly as bad as the market thought. It was negative, but not negative enough. So we didn't get any play out of it. And as you can see on the short-term charts right over here, basically this trade required a tremendous amount of patience. We just had to hang out, hang out, hang out, hang out. But here's where it gets very interesting. Remember that the Kiwi economy was in serious trouble already. So what happened was that the night of Monday night, there was news that a major financial institution in New Zealand stopped paying dividends on their instruments. And this created a huge flurry to the downside in the Kiwi Dollar and pretty much took us out at plus 60 as we made the trade go in the money. The good example of this is that typically whenever there's a problem in the economy, there's going to be other problems down the road. So even though we didn't succeed in our initial event risk, by staying in the trade, by being very patient, we were able to catch another event risk that essentially went our way. It's a very powerful testament to why you want to trade trend, because usually trend is simply an expression of good things continuing or bad things continuing. And of course, in this case, in the Kiwi Dollar, it was a question of bad things continuing. Now, turning to the Euro Dollar trade later in the week, I want to show you something interesting as well. This was an interesting trade mainly because it wasn't a classic BKT trade. You notice over here we had this monster downside candle in the dailies that was so powerful that it actually went all the way to the second Bollinger Band. Now, typically, we don't like to trade this because it looks like it's an oversold situation. But in this case, we made an exception, and I think it was a relatively valid one, because whenever you have a massive move like this, a 200-point move into the sell zone, it usually means that there'll be at least some continuation going on. That means that the market is seeing something so different, and there's such a radical change in sentiment, that sentiment change is likely to continue for a while longer. So, needless to say, what happened in the Eurodollar is we did get our move to the downside, which burst actually all the way down around 2 o'clock in the morning on Wednesday morning. The problem here, and this happens in markets all the time, and unfortunately it's one of those kind of things that happens one out of about 30 or 40 trades for us. We got hit, but some of the other people who were following us through different broker dealers just did not get hit. This is one of the kind of situations where our T1 literally got hit and just the prices did not go any further. Usually they go 5, 6, 7 points in, so almost everybody gets done. And because both of us were away and because we posted that you had to really watch the trade, some people did not make T1, other people did make T1. We obviously made T1, then went to break even and made the trade. And this is just one of those kind of very freak bounces that is a function of the FX market. There's nothing that we can do about it. Typically, this is the reason why we watch the market so closely, but this was the one night where we couldn't really watch the markets. And generally, we're going to obviously have our eyes on the markets 24/7 most of the time. But this is another reason why you have to be very active and participatory. If you're within T1, you're not hearing anything from us because we're obviously away. You have to take your own initiative and take the profit and then move along. For those people actually who stayed in the trade and just simply woke up in the morning, they still got a second chance because the thing retraced, but then we had more negative Euro-dollar news, or rather positive US news in the US session. So they actually went all the way down, and you could have actually made plus 60 points if you stayed in the trade. Bottom line, another good trade because it stayed with the trend, it stayed with the continuation motif, and it very much validated the BKT model of trading. 2 more wins for the week. We look forward to seeing you next week with all of our new trades, And I talk to you soon. This is Boris Schlossberg from BKT.